Hello and welcome to EduFund. In today's episode, we have a very special guest with us, Abhinav Sharma, who is a fund manager with Tata Mutual Fund. Abhinav brings along 17 years of experience, and he is currently managing the Tata Large Cap Fund, Tata Infrastructure Fund, and Tata Ethical Fund. Prior to joining Tata, Abhinav has worked with HDFC Securities, Lehman Brothers India, Brick Securities, and also JM Finance. Qualification-wise, he holds a BTech degree from IIT Roorkee and a PGDM from IIM Lucknow. Welcome to the show, Abhinav. Thank you. So let's start with Tata Large Cap Fund. Could you throw some light about how is the process of stock selection? Is it more a top-down approach or a bottom-up stock selection?
See, as you know, Tata Large Cap Funds, as mandated by SEBI, they have to invest in the top 100 companies by market capitalization. So that basically forms our investment universe.
Yeah.
And within that, we as a house, as Tata Mutual Fund, we follow a growth at reasonable price philosophy in terms of stock selection. What it means is that we are very valuation conscious. At the same time, we are not someone who will just invest in a stock just because it is deep value.
Yeah.
So that's the kind of broad framework. We are valuation conscious, but at the same time, the stock should have some triggers for that value to come out, or it should have some kind of long runway for growth. So it's a combination of both. So that's how we select stock.
People often tell about large cap that there's not much room of generating alpha. And when you are taking exposure in large cap, you should generally try to move towards a passive style of investing. What is your take in that, and how do you try to ensure that a value is created for the investors?
So this question I get a lot of times. And see, if you look at an overall construct, India is an emerging economy.
Yeah.
It's not something like a developed economy where you are starved of ideas. Or there are a couple of 5 or 6 companies which are driving the markets. So it's a large developing emerging economy. And there are always new ideas which come up. Right? And today, even if you see, while the universe in large caps is up to 100 stocks, but within those 100 stocks, there are so many sectors, there are so many stocks. And as a fund manager, I can always play around with weights.
Yeah.
Like I can increase weight where I have more confidence, and I can reduce where I don't have confidence. Also, there is a flexibility that you can invest up to 20% in mid and small caps.
Yeah.
So if you combine both of these things, you will see that there is still ample opportunity to create alpha within the large cap space. And if you see in the last 1 year and also over the last 3 years, this alpha creation has actually increased.
Yeah.
If you look at the large cap funds track records, it has improved.
Yeah.
The basic reason behind it is that the market itself is now broadening.
Right.
We are in a growth phase as a country. GDP growth has picked up. So if you compare it, say, with previous 3 years, you remember that was a period when India was not growing as strongly. A couple of sectors were only driving the return.
Right.
So this is a different economy. And I think in this economy, there is a lot of scope for large cap funds to create alpha. And it has been proven.
Yeah.
It's been proven over the last 1 to 3 years. And I think going forward also, the view which we have, it will continue.
So sectorally, the entire fund is very diversified, or do you also have some tiltness towards any specific sector?
See, it is diversified. Of course, there are weights which every sector may have different weights. But there is no such case that there is any sector which is very heavy. So it's a fairly diversified fund across sectors.
Okay.
If you see, banking and finance is the largest weight.
Okay.
Close to 30%.
People often talk about, one common question which I've been getting is that markets are at its peak, valuation is not making sense, 73,000 is very costly. What, according to you, should a retail investor do if they want to participate in the market and does not have a very significant amount of risk appetite, but have a decent runway of, say, a horizon of, say, roughly around 5 years? So in those scenarios, how do you recommend a retail investor to participate in the market?
See, for a retail investor who has a moderate or a low risk appetite, I would say mutual funds, SIPs are the best approach. And it has been proven over the last 5 years at least. And according to the risk appetites, you can choose different funds. Within mutual funds, we have a number of different kind of funds: large cap, mid cap, small cap. So large cap is lower risk than mid cap, small cap. And you also have balanced advantage funds, which are even lower risk profile. So according to a risk appetite, one can always decide which kind of funds you can buy. As far as valuations are concerned or market levels are concerned, see, I think market levels on their own, they don't make any sense, right?
Yeah.
Because we have seen Sensex at 1,000 also, and today we are at 77,000.
Yes.
So what really one should see is its valuation.
Right.
And if I look at the valuation today, and when I am speaking mainly for the large cap space, valuations are nowhere close to the peak valuations which we have seen.
Yeah.
They are not cheap. They are not what we saw during COVID or maybe even immediately after that. But they are definitely not expensive.
Yeah.
Even some of the very large names within the large cap universe, they are trading and below their historical average valuations.
Let's move to the infrastructure fund. The government has a massive focus on infrastructure, and also that was very well seen in the recently announced interim budget that the capex allocation is very high for FY25. How do you see the growth in the infrastructure space, and how is your process of selecting stocks when you are managing a thematic or a sector oriented fund?
See, government has been very focused on capex, and I can give you some numbers. In 2019, March 19, government capex as a percentage of GDP was 1.6%. In this year, which has been proposed, FY25, it will be close to 3.4%. So of GDP, and the GDP has also grown in the last 5 years.
Yeah.
So it's a massive jump. So clearly, government has done its part, and they continue to do their part. But what is also more interesting is the private side of the things, right? The private sector. And private sector is something which has been very, very weak over the last, if you talk about the decade of say 2010 to 20, most of the private sector companies, they were busy correcting their balance sheets, reducing leverage, not doing capex, but mainly on utilizing their additional capacity. But today, as it stands, most of the companies in the private sector, they are flush with cash.
Yeah.
And everybody is trying to invest. And I think going forward, while government will do its part and government will continue to do its part, but the real kicker will come from the private sector.
Right.
And that is where we are finding, we are looking for more opportunity. And if I will ask me, say 3 years down the line, the private capex in the country which we have today, 3 years down the line, it will be a much bigger number.
Right.
So when we construct, say, a thematic fund like an infrastructure fund, we keep in mind all those macro factors like government capex is strong, private capex is picking up, also residential. If you see residential reality cycle in the country, it's really gone from nothing to it is going at a very fast speed.
Yeah.
It's going at a very fast speed. So that is also one space where we have focus. So, and these are say broad themes, and within them there are various subsectors like, say, for example, cement, property, capital goods, engineering, manufacturing, power sector, logistics. So these are some of the sectors which we look at while investing in and making the portfolio for infrastructure fund. You also asked what we keep in mind. So see, this is a thematic fund. So it comes with its own risks.
Right.
And in my view, in a thematic fund or in a sector fund, returns come when the sector do well.
Right.
Returns will come. But as a fund manager, it is also my job to manage the risks, because I have to be very cautious, because these times when things are good, then you tend to make mistakes.
Right.
So that's why we try to do good risk management as well, because returns, I am sure it will come. But at the same time, when the returns don't come at some point of time, you need to have the portfolio which will withstand that time as well.
When you're trying to pick stocks in this sector, like since it's thematic and probably you will have related ancillary sectors also as a part of infrastructure. So while selecting stocks, what kind of allocation in the terms of market capitalization have you seen in the overall fund? And how do you try to ensure that is retained given the inflows which is going to start to come?
See, as I said, this is a thematic fund, and most of this theme has not done well in the last 10 years. So a large part of this theme comes in the mid and small cap domain, as of now at least. But from my end, as I said, we also have to keep a track of risks as well.
Right.
Keep the track of portfolio liquidity. So what we try to do is that we try to keep a decent balance. So today, if you see between large, mid and small, it will be mostly equally split.
Yeah.
And that will be our endeavor going forward also, to keep it equally weighted between say large, mid and small. There will be some differences now and then.
And when you talk about risk, I mean, since this is a thematic sector-oriented fund, definitely, naturally, the risk is definitely going to be a little higher than the entire broader market or fund. So what advice would you have for retail investors? Under what circumstances, or what are the key features or characteristics which they should evaluate while picking the sectoral space or maybe going thematic, and what should be the allocation in their overall portfolio to a thematic or a sectoral fund, and what kind of a time horizon should they look at if they're taking an exposure to this kind of a fund?
See, I will say for any investor, if they're looking, if they have decided to get into a sectoral fund, then they should not allocate say more than 10% of their corpus these funds.
Okay.
Because these are inherently risky.
Yeah.
And they can have very long cycles. So while when the time is good, like it is right now for infrastructure, and we think it will continue for the next 3 years at least, they can create a significant alpha for your portfolio. So as it's known, right? Higher risk, higher return.
Right.
So you're taking higher risk for some higher return. So that is how it is. Don't allocate too much. Maybe 10% is my suggestion. Based on our appetite, one can have 15% and one can have 5%. But don't make it a major part of your allocation, portfolio allocation. And in terms of time horizon, one should have really long time horizon. Say. Because infrastructure, for example, I'll give you 2007 December was the last peak in the infrastructure index. It was broken in last year December.
Okay.
So for 16 years, if somebody had come in December 2007, one would not have made money.
Right.
But since then, it has given you very strong returns. So in this, it's very difficult to time. And if one is really coming in, then they have to have a really long horizon, at least more than 5 years at least.
Could you also throw some light on the process of selecting stocks in this kind of a fund? Would it be a mix of both top-down approach versus a bottom-up, or would it be purely a bottom-up approach? And how do you tend to diversify the overall equity portfolio in this fund?
See, it's top-down is already done.
Yeah.
For this. It's a thematic or a sectoral fund. So top-down is mostly done. So now it's mostly a bottom-up approach. Within a bigger theme like infrastructure, you will maybe pick up, okay, let's say this time property is doing well for this year or the next 2 years. Then you will have some stocks in, say, property sector or maybe power sector. But I will say it's primarily a bottom-up approach, and most of the calls are active calls. In terms of which themes or which stocks you want to buy, it's mostly bottom. Now coming to risk, which you asked, in terms of risk management, or you said diversification.
Yeah.
Which is, I think, both two sides of the same coin. So diversification we try to maintain, and as I said, in terms of market capitalization, it's fairly well diversified.
Yeah.
But also in terms of number of stocks. So what I have seen in this theme, especially over the last 3 years, returns have been very, very strong.
Yeah.
And with that, we have increased diversification. So I think diversification gives two benefits. One is that you are able to capture more and more from different themes. But at the same time, let's say there is some untoward incidents, or there is some sharp correction in the markets, it protects the downside.
Yeah.
So that is also a risk management approach which we follow.
Coming back to the point of the retail investors, I mean, one common question which they also ask is about lump sum versus an SIP, and that too in a thematic fund. So what could be your suggestion or an advice to the investors? What should be their approach, in which method to select when they are looking to invest?
See, in my experience, it is very difficult to time the markets.
Yeah.
And while one may get lucky, but you cannot repeat it again and again. So it's always better to go with an SIP approach. Whether it is a thematic fund, whether it is a diversified fund, it's always better. Such instances where you can put money into market in a lump sum manner, they don't really come very often.
Yeah.
Right. So it's better to stagger your investments, do SIPs, don't stop them even if you make good returns.
Yeah.
So that will be my advice.
Okay, thanks a lot, Abhinav. Thanks a lot for your time, and it was wonderful having you with us. And I'm sure our viewers have definitely taken away some insights about the large cap fund and the infrastructure fund. Thank you for your time.
Thank you. Thank you so much.
So, ladies and gentlemen, that's Abhinav Sharma from Tata Mutual Fund, who manages the Tata Large Cap Fund and Tata Infrastructure Fund along with Tata Ethical Fund. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.